Morning. It's a Monday morning. I'm Pete Najarian. This is the Take for Market Rebellion. The wild ride last week was absolutely extraordinary. We work into it again this week on this Monday morning as we're really starting to rock and roll to the upside. But touching back to last week, there's a couple of different things that really stood out. Number one, when you look at where the volatility index was just the week before on the 23rd, and you look to see where that VIX was trading, it was trading around 27. We finished out last week around 38. So extraordinary move to the upside. We've been talking about how volatility has been building in more and more and more, and exactly what that's telling us about the markets and the expectations. 2% moves daily. We certainly are absolutely getting some unbelievable rides within the day. So let's go back to Friday. Friday, we actually lost a long way from 27,000 as we were pushing to the downside early on. We were down well over 300 plus points, 350 points to the downside, only to actually rally back by the end of the day and only finish down about 150, 155 points or so. Now, the big change, however, was the NASDAQ and the dislocation. We talk about that all the time. Yes, we gave up 11,000 early in terms of the NASDAQ, but that moved to the downside, 275 points to the downside. That's a nearly 2.5% move from the NASDAQ on that big push to the downside. We all know how the week finished out. We were all looking and anticipating towards the end of the week because it was going to be a monster day on last Thursday in terms of the earnings, and they did deliver. They delivered the earnings. However, the interpretation of those earnings was not so great for the most part, other than Google, but the rest of them absolutely getting hammered to the downside, dragging down the NASDAQ in a big, big way. So we were down about 40 points also in the S&P 500, well underneath that 3,300 level. Interesting thing, and I'll just give you a spoiler alert, we're above all those numbers once again. 27,000, we're right there at 27,000 right now with the Dow. We're up 460 points today. We look over at the NASDAQ, recaptured 11,000. S&P recaptured 3,300. So yes, we moved to the downside. We had a big sharp move, but it looks like a pretty impressive move back to the upside as we continue this roller coaster ride. And I'll tell you what, we got tomorrow, obviously, election. So we've got a lot more to talk about there. Volatility, we did have one close last week over 40. Now, according to a lot of the guys that I talk about the markets with day in and day out, Morgan Stanley, Goldman Sachs, you go through a lot of the different bankers and so forth, but a lot of the guys really do get caught up in the stat world, and so I'll give you a couple of these numbers. When you've got a close over 40, 3 months later, you're up a specific percentage on the overall markets, and that's just something that as you go over and look at over time, you'll see it's pretty interesting. So whenever you get those big spikes, and we talk about it all the time, there's kind of that no man's land when you get down to the 20 to the 25 on the VIX. It's sort of that, you know what, kind of a flip of the coin. You start getting well above 25s and the 30s, you have a little bit better sense. You start to get a close over 40, and that seems to be one of those areas, and it makes a lot of sense, and here's why. Why did we get over 40 when you get on the VIX? Well, a lot of powerful selling to the downside. We talked about last week being one of the worst weeks of the year if you go all the way back towards March, right? So really heavy selling. Well, when there's heavy selling, there's opportunity. We talk about that all the time, blood in the streets. When you see so many other people that are panicking hitting the exits, oftentimes that can be, if you're looking at quality names and you find those quality names, you oftentimes will find, well, that's a great opportunity, the opportunity to buy, and the opportunity, if you understand the derivatives markets, to not only buy stock, but sell high implied volatilities. With that VIX trading at 40, the implied volatilities oftentimes is skyrocketing as well. As that's all going on, that gives you that much more cushion to the downside, and still with plenty of upside. And of course, you can always buy those back along the way if somebody chooses to, but you really have to understand that. And that's something we talk about all the time. I finish every day talking about Market Rebellion and the great team we've got. We do have an absolutely amazing team of guys. By the way, no round table today. We're sort of segmenting things around a little bit and getting a little bit of time and a lot of other things going on as we build out Market Rebellion Media, and it's getting bigger and bigger and bigger, and that's thanks to you guys. This, by the way, we're kicking around the idea. I'd love to hear from you on Twitter or anything else, Facebook. Tell me what you think. A lot of the guys have really been pushing hard for, let's do this live. I'm all in. I do the TV live all the time. I do radio live all the time. So absolutely, I'm all in. So this is something we've been kicking around and we're trying to figure out. I like to do it nice and early in the day, first half hour or so. Right now we're 39 minutes into the trading session. This is the time of day I like. What do you prefer? Are you looking for the first 30 minutes into the day, the first 45 minutes into the day, the first hour into the day? What is your best preference? What is your choice? Tell us. Let us know. Let the guys at Market Rebellion know. Let me know through Twitter, Facebook, or any of those other social medias where you can reach out and get a hold of me and ask questions, but also give me opinions. So that's something. That's my opinion poll for the day for you. When would you like to see that happen? And we'd like to do this live. So you tell me about that and tell me what you think about all that. So the tech selling, getting back to last Friday, absolutely incredible tech selling. Facebook, Zoom, Netflix, Apple, Tesla, Amazon, PayPal, Nvidia, Twitter being the worst. Twitter absolutely hammered. Yes, we had unusual option activity. Now let's clarify something real quick, shall we? We talk about this all the time, and there are some clowns out there, and I do mean clowns because it gets frustrating because they just totally cherry pick. Now, all of you probably know this, but we have had, and we talk about this all the time, 8 or 9 or 10 bullish calls on Twitter over the last multiple months, from the stock actually starting in the mid 30s all the way up till it got to 52-week highs over 52. Now, that being said, they were right, 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 they were right multiple times all the way into the earnings number. That time wrong. That happens. At some point, it ends, and you just never know when that's going to be. That's why we roll. That's why we buy an option here at $1.50. We sell it for $3. We buy another one for $1.50. We sell it for $2.50. Buy another one for $1. Sell it for $2. That whole process, the entire chain on the way up, and that way, yes, that one was a bad call by me. But the unusual option activity, I'll follow that. When they're buying and they're rolling and they're continuing to roll and they've been right, if I can roll with that for 8 or 10 times and then suddenly they're wrong, that's okay. That's exactly how things are going to happen. At some point in time, that music stops, and that's okay. That's what's going to happen. That's part of the markets. Be a big boy, be a big girl, understand all of that. But unfortunately, if that was your first entry, obviously you're frustrated. Totally understood. But the clowns out there, the real clowns out there that are so critical oftentimes about what we call follow the smart money, the unusual option activity, and they have no clue. These are guys that have been in the market for years and years, still no clue. That's okay. We try to educate. Either you want to be smiling every day or you don't. And I guess some of these people just don't. They want to be bitter pills. That's okay. So anyway, the standout of the day last week, absolutely out when you came out of that earnings last Thursday, Google. That was absolutely tremendous. A nice rocket to the upside. The rest of those names, obviously the pressure was on. When you look at Apple and you look at Amazon, you look at Facebook. Early on, you had Facebook. It was up towards 295. Bang, they pulled the rug out, and that was in the after hours last week on Thursday. And then Friday, of course, we all know we've had that selling. And as I said, we had that 275-point move to the downside in the NASDAQ. Got an update for you today. Things are starting to look a little bit better in the NASDAQ. Holy smokes, a nice move to the upside. So tech was under pressure. Semis were under pressure. Biotech was under pressure. You know, it was hanging in there really well and has hung in there a little bit recently, just a couple days worth. Financials. Industrials actually showed a little bit of green as well. Materials were generally flat. This was in a market that was absolutely getting throttled to the downside, and the Dow itself did come back nicely. A lot of those kinds of names in the Dow, that really was part of what was helping pull the Dow back up off of those lows when it was down 350 points or more to the downside. Wow. I'll tell you what, did you get a chance to see the volatility index on Friday, that big move to the upside, then the big pullback? Really unbelievable to watch. And we're getting an interesting little bit of movement in the volatility index today. It's down a little bit, not a lot, especially considering where the markets are, but the volume. Almost 35 million contracts in the derivatives world, the options world on Friday, a monster day once again. Apple actually back and above their normal levels of 2 million. They actually traded closer to 2.7 million contracts. Tesla, over 1 million contracts. NEO, nearly 800,000 contracts, actually about 746,000 contracts in NEO as well. So those names, huge volumes there, but the overall volume of 35 million, that's a big number. We've been talking about how we've been watching it. Some moves here, some moves there, the pullbacks a little bit. You get back into the mid 20 million range or whatever. It feels kind of light. You get back towards 28, 29, starts feeling pretty good. You get those 35 million contracts like we'd seen on Friday. Wow, that's a monster day. That's we've had some huge days this year, and that one's in that close category. We had the upper 40s. We've had some monster days. There's no doubt about that, but a great example of just how much activity, and that is where the growth is. And the people who are not embracing the derivatives markets don't understand. By the way, Warren Buffett embraces these markets. Carl Icahn embraces the derivatives markets. You go across the board and you look at the biggest, the baddest, it doesn't matter about age. They understand that derivatives are a huge part of the markets and a huge part of the investing and trading world. So, opening indications today looked really, really good. We kind of got into a range where we started to pull back off of those opening indications. We did get to the open. We were up about 350 points right out of the gate, about 1.25% or so. NASDAQ was up about 85 points, which was significantly less. It's about 0.8%. S&P 500, about 36 points to the upside, about 1%. Now, what really makes all of this so interesting was quickly in the first 30 minutes or so, we were still in the same spot about in the Dow, but we started seeing almost a doubling in the NASDAQ. It's up 150 points first 30 minutes of the day. Started to see the S&P actually start moving to the upside. All three major indices were up 1.4%, working almost in lockstep, as we've talked about before. Now, last Friday, we were talking about, wow, big dislocation to the downside where the NASDAQ absolutely tumbled. And meanwhile, the Dow came back late in the day and wasn't so bad. So, where are we right now? 460 points now to the upside in the Dow, right at that 27,000 level. We got the NASDAQ up still 150 points, well above that 11,000 level. S&P 500 up above 3,300, up 52 points right now, with the volatility index easing back a little bit and a little bit more, trading around 37. So it's down a little over 2.25% right now. Early on, what were some of the early indications? Energy looked pretty good. You had Chevron, you had Conoco, you had BP, you had Exxon, all favorable. A little bit of an easing back there. Financials really started out very, very strong as well. You had Visa, you had Goldman Sachs, you had JP Morgan, Morgan Stanley. We had Travelers, American Express, all to the upside early on. Materials, very strong. Freeport McMoran, we've been talking about the material space for a while now. Freeport Mac definitely to the upside. It was up over 2%. You had Vale as well. U.S. Steel, industrials are on fire. Triple M, you've got CAT, you got Lockheed, you've got Honeywell, all very, very strong early on. Tech was lagging. Semiconductors were lagging. They're not lagging anymore. Now still, we did pull back a little bit. Now NASDAQ up about 136 points to the upside. That volatility has come down a little bit because about a half hour ago or so, it was trading in the mid 37s. Now we're in the low 37s. So if the earnings season does march on, and we are continuing to march on. I know we all talk about, well, we're through a little big portion of it, which is true. Totally true. We got through for a lot of financials, a lot of industrials, a lot of semiconductors. We've gotten through a lot of tech. Now, here's what's on tap for this week. Oracle, tech. Qualcomm, chips. T-Mobile, AstraZeneca, Bristol Myers, Square, CVS. You get the idea. PayPal. You get the idea. There are still plenty of big names out there that are going to be reporting earnings. So earnings season is not dead. Now, focus will be, however, on the elections. That's going to be a monster focus. Has been for quite some time. Will continue to be. And at some point in time, we'll start talking about stimulus again. And at some point in time, maybe there's going to be a little bit more stimulus, which is something that the markets certainly have been moving up and down on a lot of the commentary coming out about stimulus. So really early on in the session, we had Uber hitting on the unusual option activity. I like trades that make sense to me in terms of how people structure trades. Sometimes it's just plain old buying. This time it's not. In Uber, stock was trading about 34.40. So the buyers were buying this Friday's, November 6th. We are in November now. This Friday's expiring, November 6th expiring, 34.5 calls. So call it right at the money, right where it is, 34.40. They're buying the 34.50s, okay? But they're also selling the 36.50s. And they're getting a decent enough amount of money on this $2 spread. So they're buying the 34.5s, selling the 36.5s. I like when I see this. I've already participated. I'm telling you right now, I just did this trade right before I came in here. I like what I'm seeing risk reward. That trade was done around 75 or 80 cents. It's nearly a triple. It's not quite a triple, but it's very, very short term, so it gives you a little bit of room, and it's not as much money because of the fact that it's put out there as a spread. Doesn't mean you need to do it. Doesn't mean you should do it. I'm just pointing out that we are seeing, in terms of the unusual today, that one did stand out for me early on. So it's about 4,000 of those, as I mentioned. Buying the one, selling the other. It's just a standard old call spread, they call it. So your risk is what it cost you. Stock, see, this is what those who don't understand the derivatives markets, that's what frustrates me so much. This clown or two that are out there that say this stuff. The full risk of this trade now, if you spread it off, is about 80 cents. It's whatever you pay. That's the risk. Stock goes down $5, you're out 80 cents. Stock goes down $10, you're out 80 cents. Stock goes down and doesn't get through this 34.50 level, you're out 80 cents. It does explode to the upside, goes somewhere through 36 and a half, you made your money on that. So it's understanding risk reward, and you just have to understand, do you want to put on the limit your risk by spreading it off? Do you want to put it in by just buying a call? How do you want to do it? Those are all the different approaches people can take. No matter what, you have an understanding of what the risk factors are, and that is the beauty of what the derivatives world creates for you. Our educators will tell you all about that. They're the best in the business. By the way, we are finally starting to warm up. This week's today, about 55, just looking at 62, looking at 64, 68, and then 60s and sunny throughout the weekend. So I'll tell you what, that's why I'm back in the golf shirt. Might have to go out and hit some balls a little bit later on, because maybe it's back, baby, after all that snow that came early on. Folks, have a great day of trading. We'll see you later on. I won't be on doing unusual option activity. Won't be on halftime till Wednesday. So Wednesday at noon, you'll see me on unusual on CNBC on the halftime report. Friday, I'm going to be doing a double. So until then, I look forward to just being with you, trading with you, and being a part of everything you got. Now, remember, let's go back. Tell me what you want. Do you want it to be live? If so, what time do you want it to be live for what we're doing right here, The Take? Folks, have a great day of trading.